Hi there, my name is Ken Krotz. I'm a certified short sale specialist and real estate broker in the Seattle-King County market and here in the Great Northwest. In this segment, I'm going to talk to you about foreclosures, about tax implications, and about deficiency judgments. And then we'll wrap up this series with a conclusion. All right, let's get started. With foreclosures, foreclosures are really not an option. Foreclosures by far and away are the most damaging to your credit and the future ability for you to become a homeowner. It's estimated that a foreclosure will cost you 200 to 300 points on your credit score. It'll keep you out of a mortgage qualification for 5 to 7 years. And on the sale date, the property is going to be sold at the auction courthouse steps to a third-party investor, or it'll revert back to ownership in the bank, known as an REO or real estate owned. The foreclosure timeline starts with the notice of intent. Bank sends you a letter saying, if you don't pay up all your back payments and penalties, we intend to pursue a foreclosure action. 30 days from there comes a notice of default. Notice of default formally charges you with defaulting on your mortgage obligations and indicates that if you don't pay up all your back payments and interest and penalties, they're going to go ahead and take the next step in the non-judicial foreclosure process here in Washington State. That's another 30-day waiting period for the bank. At that point, they file publicly a notice of trustee sale to public filing. So now the general public has access to the knowledge that you're defaulting on your mortgage and the bank is actually planning to sell your house 90 days from the notice of trustee sale filing. It's a minimum 90 days from that time, and it will set forth the time and location that they plan on holding the auction, at which point they'll either sell it to a bidding investor or take it back into ownership on their own. Now, you can get a delay in the notice of in the trustee sale date. We get regular extensions as a part of the short sale negotiation process that we engage in, simply because the banks are so overwhelmed that they can't even process a short sale in the average 90-day process. Some lenders are better, some lenders are worse. But the average short sale negotiation is going to take us in excess of 90 days. So if you're in the middle of that process, let's talk about short selling. We might be able to keep you in the house a little bit longer, minimize the damage to your credit, and help you get qualified for a new mortgage a lot sooner. Now, there are tax implications to short sales and foreclosures. I encourage you at this point to talk to a qualified CPA who's knowledgeable in this particular area of financing. But generally speaking, if there's debt forgiveness, the IRS considers it a taxable event. If you sell a property in a short sale or you have a trustee sale, the IRS, according to their website, considers that a sale, and the forgiven debt is considered ordinary income. Now, there is a provision under the 2007 Mortgage Debt Forgiveness Relief Act which provides tax relief for qualifying home buyers. I have an IRS handout that I'd be happy to email to you as a PDF or to direct you to a link to the IRS website where I personally got that same handout. It has specific qualifications. It deals with whether or not the mortgages were used to purchase a property or refinance mortgages used to purchase a property or mortgages used to substantially improve the property. But I encourage you to look at the handout, check out the IRS website, and talk to a qualified CPA. Now, that provision does apply towards short sales or foreclosures. Now, deficiency judgments. Here again, this is an area of law. I'm not a lawyer or a CPA. This is not legal advice. I really encourage you to talk to an attorney who has specific knowledge in this area of the law. Again, the law is highly specialized, so if you need a referral to a good qualified attorney, I'd be happy to do that for you. Deficiency judgments can apply to foreclosures or short sales. Washington State is a non-deficiency state, which means that the first lien holder, if they foreclose, is going to get the asset back, get the house back, and they won't have the right in a foreclosure to pursue deficiency. Many will hold that they don't have the right to pursue deficiency in the case of a short sale either, but again, that's going to be up to your attorney and those that are involved in the law to determine in your particular case. Second lien holders may pursue deficiency judgments. Now, the practical realities for a second mortgage holder who intends to pursue a deficiency is, in the case if we've done a short sale, generally the second lien holder will receive about 10% of the mortgage balance prior to approving the short sale. In the case of a foreclosure, they've got nothing, so the entire mortgage balance may be considered a deficiency. But in a practical sense, they're going to have to go to court and file in Superior Court to get a judgment, a deficiency judgment from a judge in order to have the right to collect the debt. Once they have that judgment in hand, now they have to collect it. This is again where seeking qualified legal advice is really highly recommended because you may have bankruptcy options which will eliminate that debt. Again, it's a matter of whether you're qualified for bankruptcy, whether or not you have the legal rights that only you and your lawyer are going to be able to determine in your particular circumstances. The threat of bankruptcy, however, for these second lien holders who do pursue deficiencies, it does make it a fairly unfruitful process for them. I've seen some deficiencies pursued, but in the vast majority of cases, I have not seen lenders pursue deficiencies. So it's again, it's a risk. But if you're in that circumstance where your option is foreclosure or short sale, it's a risk that you can minimize to some extent by doing a short sale with us and having us pay at least 5 or 10% of the outstanding balance on your second or third mortgage holder to minimize or to reduce that deficiency liability by that amount. Now, how can we help you going forward? We're going to conclude at this point. If you are seeking loan modification, we have a loan modification calculator or the short sale calculator. We have links to help you for free counseling through the HUD approved counselors. We have how to talk to your lender report, the homeowner loan modification kit, DFI bulletins from the Department of Financial Institutions to help you make sure that if you're working with a loan modification company that you're not getting scammed. If you're looking to short sale and you don't qualify for a loan modification or it's just not an option for you, just call me. Short sales are something I've specialized in for years. We will sit down and make this as painless as possible. And I have a very high success rate in short sales. So if you want to maximize your opportunity to avoid a foreclosure because of the certain damage that they do. Our goal when I started this video series was to raise your awareness about financial hardship, which I think we've done. Go back to the first video if you don't remember. Financial hardship has a private aspect and a public aspect. We want to address it prior to it becoming public. We wanted to show you the process and how it applies to you and those you know. My goal is to help you turn on your radar so you can recognize financial hardship in your own life and in the lives of people you know. Let's start early, make a plan, and help retain your assets and to minimize the damage that financial hardship can cause. We want to help you make a plan for dealing with the hardship. My goal is to help you before you start dipping into your savings or your retirement. We want to give you the tools that we need to move forward. I just outlined many of the free tools that I have available to you to help you do loan modifications. There's nothing in it for me. I really want to outreach to people and help them be able to do this on their own. Loan modifications are not that difficult. You shouldn't have to pay somebody $2,000 to $3,000 up front in cash that you probably don't have anyway. So do something that you can do through the tools that I'll provide you for free. Now, I can provide support and expertise in executing your plan. And that concludes this video series. I hope you've enjoyed it. I hope it's been very informative to you. If you'd like to talk about your particular circumstances, feel free to call me at 425-432-8600. Email me at ken@kenkrotz.com. That's on the screen. You can visit my website, www.kenkrotz.com. And I'll soon have a new website up. That'll be www.kingcountyhomesolutions.com. I look forward to talking to you soon. I hope this has been helpful, and have a great day.